Chapter 2, Financial Statement Auditing Environment. Okay, the context of the financial statement. Okay, the primary context in which we are concerned with is the industry or the business itself of whatever client we're thinking about engaging with. The context provided by the client's business impacts the auditor and the audit, and is a primary component of the environment in which the financial statement auditing is conducted. Remember, in the beginning, we look at the business. What kind of business is it? What do they provide, a service or a product? How do they provide this? How do they account for their inventory? How do they account for their purchases, etc., etc.? Here's the business model. Organizations that exist to create fair value for their stockholders. So we're talking about public companies. Okay? Due to the way resources are invested and managed, a system of corporate governance is necessary. SOX requires the corporate governance such as what you see here. Board of directors, and within the board of directors is the audit committee, which is whom we as auditors report to. Okay, here is the objectives of the business model. So we have the objectives of the business, we have the strategies of the business, the transactions of the business, and whatever internal controls that they have. Processes are in the center. So in the next slide, next couple slides, you'll see the arrows that connect these two, which is going to culminate in the assertions that we are going to audit in the future. Okay, so here are the business processes that you see here. Okay, financing, purchasing, human resource, inventory, and revenue. If you think about those 5 processes, this is the business. Here is a flow chart of or a graphical depiction of the business. So we have management. Here we have the objectives and strategies. So of course, management is going to devise the objectives and strategies. Here are all the business processes: financing, purchasing, human resources, inventory, revenue, etc. Okay. Now, in here we have information systems and internal controls to ensure transactions are properly executed, captured, and processed. We're going to audit these processes, this system here that allows these processes to work. Okay, so here is our internal controls here. Okay, here we have risk assessment and management. We have corporate governance over here. Remember our inherent conflict of interest. Okay, performance measurements and assessment here, and external financial reporting. So as these are going, you see how the arrows are going, all these processes creating these transactions. Okay, they're going to come out here. Management is going to determine what their performance is. They're going to assess that, and they're going to report that back to management. This same information, creating these transactions, after this happens, then management is going to issue financial statements as to what summary, or the summary of all of these things over the accounting period. Okay, here are the organizations that all of you probably already know. We have the Securities and Exchange Commission, which is a congressional authority that came out of the Securities Acts of 1933 and 1934 to establish accounting and auditing standards for publicly traded companies. Okay, this does not apply if it's a limited partnership, if it's a proprietorship, it doesn't count, and for non-public corporations either. Securities and Exchange Commission does not regulate for them. Okay, SEC delegates the authority to different smaller agencies within the agency. So Securities and Exchange Commission is like the daddy of all of our accounting profession when it comes to public accounting. So we have the Financial Accounting Standards Board, okay, and then we have the AICPA, and we also have the Sarbanes-Oxley Act of 2002, which actually was a separate Securities Act from 1933 and 1934, which gave the SEC the authority to regulate the public accounting profession by establishing the PCAOB. So the PCAOB came out of the Securities Exchange Commission based on mandates from the Sarbanes-Oxley Act of 2002. Let's see. The PCAOB they set our standards. That's pretty much. They're a quasi-governmental organization, which they say quasi because it came out of a government organization, but they act independently, and they're overseen by the SECs, which is the quasi-government. They formed it to provide government oversight over our standards when we're conducting audits. It is not an accounting, even though it's public accounting, public company accounting oversight board. They regulate auditing. Okay. Next, we have the International Auditing and Assurance Standards Board. Okay, this is the same as our GAS. Then we have the International Accounting Standards Board, which is the international version of our FASB. Our auditing standards. Auditing standards serve as guidelines and measures for the quality of the auditor's performance. Okay, so it's the quality of our work. Okay, so we have PCAOB, and they regulate public company accounting. We have our auditing standards, which come from the PCAOB. And then, of course, we have the non-public companies that do get audits. They're not required to have an audit. And here is the International Accounting and Auditing Standards Board, which is the same as our GAS. And this is how many countries that are regulated by. And I guess I should include IFRS in that as well, which is the same as our GAP. So if we're doing international auditing, then we will report in accordance with IFRS instead of in accordance with GAAP. Okay, GAS. The 10 generally accepted auditing standards, very important, came from the PCAOB. Generally accepted auditing standards. Okay, so we have our general standards, we have our fieldwork standards, and we have our reporting standards. General standards, there's 3. Adequate training. That is the reason why, if we determine through evaluation of the business and the industry that we are not adequately trained in this particular client field, like diamonds, or the last example was in cattle, then we would get a specialist to help us with that, to ensure that we meet standard number 1. Standard number 2 is independence. We have to be independent. Why? Because we can't produce an objective report. We can't produce an objective opinion about information if we are not independent of the client that we're engaged with. And then do professional care. Do professional care just simply means that for a prudent and reasonable auditor, that we have used the same logic and reasoning that any other prudent auditor would have used to produce the opinion that we produced. Okay. Standards for fieldwork. 1. Adequate planning and supervised assistance. We can't just throw the grunts out there and say, oh, there you go, here, test all this stuff. The audit has to be planned, which is called the audit plan program. So when we produce this audit program, it's going to have in it how many assistants or technicians that we're going to have, which we call them grunts, and what they're going to do. And we will have a senior there as well to supervise them in their work. Next, we obtain a sufficient understanding of internal controls. We will have a set of people that are adequately trained and understand how internal controls are supposed to work. And then we pull information from the client about their internal controls, their policies and procedures, and so forth. And we will read that and get a firm grasp on how it's supposed to work. And then we test after that. The third one, field work, is to obtain sufficient, appropriate, evidential matter. Okay, so we train everybody. Everybody is technically savvy and they know what they're doing. Here, we got to test the controls, so we got to understand and get a good grasp of internal controls. Next, we take the financials and we do our substantive testing. Okay, 3 standards of field work. Standards of reporting has to be in accordance with GAAP, generally accepted accounting principles, and we actually have a sentence in our third paragraph that states that. Consistency is self-explanatory. The reporting that we do is consistent with and in compliance with all of our, back up. The consistency piece is that, especially if we were the predecessor auditor or on the audit last year, that the information that we were presented with is consistent with last year, also consistent with industry. Nothing, has changed drastically. Nothing has, in material respects, consistency. Disclosures. We have to have adequate disclosures. Our report, when it is fairly presented, these disclosures have to be adequate, and then, of course, the opinion. So we make sure that the information is in accordance with GAAP. We make sure that the information is consistent. We make sure that there are adequate disclosures, and then we provide an opinion. Those are the 10 standards, generally accepted auditing standards. This is GAS. Okay. Types of auditors. We have external auditors. Okay, that is the type of auditor that most of us strive to be. We have internal auditors. These auditors are not independent. They try and make them independent, but if you're employed by the client, then of course you're not independent. These are internal auditors that work for the client. We have governmental auditors, which is self-explanatory, and we have forensic auditors. Forensic auditors are the auditors that dig more into the everyday transactions. They will test on a transaction level, and they will be much more detailed than an external audit, because it's not feasible to do a forensic audit on every single audit that we do. Okay, so an example of a forensic audit would be an external auditor would come in and do an audit of cash disbursements for payments to unauthorized vendors. They will actually test every single payable, okay, that they've had for 10 years. Okay, that would be an example of a forensic audit. Okay. All right, so here is GAS in a nutshell. In your book is table 2.2. Okay, and you can find that in your book. Okay, principles underlying the audit. This is the Accounting Standards Board. This is our domestic board. We also have the International Accounting Standards Board as well. Okay, so the purpose. The purpose of an audit: to express an opinion on the financials. Okay, we know that. So we tested the assertions. Now we are going to express an opinion. Responsibility. Our responsibility is to have competence and capability and comply with ethical requirements, maintain professional skepticism, and exercise professional judgment. That is our responsibility. Our performance. Sufficient, appropriate audit evidence supporting reasonable, not absolute, reasonable assurance that the financials are free from material misstatement, which is in our opinion report, and it is also in the engagement letter, that this is what we do. Okay, and the reporting, we express the opinion in the form of a written report, okay, based on our testing. Okay, auditing standards. Okay, GAS and SAS are considered to be the minimum standards for the performance of auditors. We just went over those. We have our general standards 1 through 3. We have our standards of field work, and we also have our standards of reporting. Okay, interpretations. Okay, statements and auditing standards, or SAS. Classified by 2 numbering systems. We have SAS and we have AU numbers, which you're going to get. The AU numbers are codification. That's when they get assigned AU numbers, it's like law. Okay, it's kind of like if you look in North Carolina at the general statutes, those laws, before they get a number, they're off sitting on a table somewhere and they're discussing it. It's in discussion. It's a bill. It's just kind of hanging out. Okay, here's similarly where SAS is going to be, and then when it gets codified means that it goes under a topic. Like for instance, when we were discussing goodwill amortization and how to do that prior to it becoming GAAP, it just kind of hung out somewhere, and then once it became GAAP, then it entered into the statements on auditing standards and how we were supposed to audit it, and then it got a number. So we're going to look at goodwill specifically later on. Okay, so here's some examples of the numbers. Okay, statement 39 is about auditing sampling, and then it's found under AU 350 because the AU 300s relate to standards of field work on evidence collection and evaluation. So if you go to the website, statement of auditing standards, actually you can go to GAS, and you can find these. You can go to statements of auditing standards. There's also CDs and videos about how to audit, how to pull our samples. Okay, ethics and independence. Okay, we have a code of professional conduct that we have to adhere to. The ethics refers to the actual code of conduct, and it literally tells you how to act and what you're supposed to do and what you're obligated to as far as the audit is concerned, as far as issuing an opinion on these statements. Professionalism is the conduct or objectives, the qualities that characterize our profession or a person in our profession. All professions operate under some type code of ethics or a code of conduct, and that is absolutely true. A lawyer, when they pass the board, they have to swear that they're going to abide by their code of professional conduct. When we get licensed, we do the same thing, and we also have to take our continuing education in ethics as well. Okay, so we have our code of professional conduct, we have the principles, we have the rules, and we have the interpretations. So we have our principles. These are our ethics. This is what we're obligated to our shareholders by providing this opinion. The rules, these are actually the things that we have to do. And the interpretation of these rules. This is what it means, okay? Yeah, you got to do X, Y, and Z, but if you don't know, then here's your interpretation of those rules. Okay? All right. And that is the end of what you need to in Chapter 2. Okay? And this is just types of firms. Okay, so we're at the end of Chapter 2. Again, you may make your notes from these videos, and they would be especially helpful during your test. We will be tested on all the information that you have received in Chapter 2.